All right. Well, welcome to Move the Stairs, episode 69, Jordan. We are recording on Thursday, July 14th. Somehow we're in the middle of July 2022. And we're so happy that you're joining us for today's exciting conversation.
Yeah, we've got a great guest on tap today. We have Bart Schaneman, an editor with the MJBizDaily. He's going to be here to talk with us more about a recent article he wrote examining how a forecast United States recession may impact the cannabis industry as a whole. And, this is important, Sarah, because the first pillar of brand protection PR, as we know, is customer loyalty. And a key piece that Bart outlined in his article is how that may potentially factor into businesses staying afloat or potentially not during this difficult time.
Yeah, so it'll be fascinating to get into that. And of course, the second piece of brand protection is media, insider media relations. And we know that having a really strong media outreach strategy is something that you should have anyway for your hemp or CBD or medical marijuana business when the going is good. So we're excited to ask Bart how brands can continue to feature in meaningful news coverage ahead of and even during a recession, and talk about what a powerful media strategy looks like during challenging times.
Yeah, and then finally, our third component of brand protection PR, looking at brand resiliency. And this is going to be the first real recession that cannabis brands deal with. Of course, we had COVID-19 in 2020, but that was a pandemic-driven recession.
Yeah,
So
I
we're
feel
going
like you got
to,
to pull that one out of the out of
right?
the hopper.
Right. I mean, because no component of marijuana was legal during our actual last economic recession. So we're going to pick Bart's brain and see if he's got any insight to share on if this is going to be a state by state basis, if we're going to see recreational versus medical marijuana suffer more consequences from the recession. So it's going to be a great conversation.
All right, so let's bring Bart in. Bart Schaneman, how are you this afternoon? Appreciate you joining us.
I'm good. Thanks for having me.
Well, we have so many questions for you. But first, can you tell our audience a little bit more about yourself and how long you've been editor at Marijuana Biz Daily, MJBizDaily?
Yeah, so I guess it's important for me to note that I am not the editor. I am a editor at MJBizDaily. We have several editors, and yeah,
You
I've
don't
been
want your
with
editor in chief to listen to this podcast and say, "Hey, dude, you trying to
wait a
take my
minute."
job?"
Yeah, right. Give myself a promotion. Yeah,
Right.
Love it.
No, so I've been with the company since October of 2016, so almost 6 years now, and specializing primarily on cultivation and extraction reporting, but also, right, yeah, like you guys have mentioned, some more kind of macro level pieces where I just kind of analyze trends in the industry and take kind of a little bit of a 30,000 foot view on certain things.
Oh man, he just said some of my favorite words,
Right.
30,000 foot view. That's kind of what I love to do is really take a couple of different levels of analysis at different things. So hopefully that's what we're going to do in today's conversation.
Yeah, and in today's topic in particular too, because Bart, as you so eloquently pointed out in your article, this is uncharted waters. I mean, we haven't dealt with this before because cannabis industry being as new as it is, COVID-19, 2020, and that economic downturn was really our first kind of experience with that. And as we saw in Denver, it didn't take long for dispensaries to become essential, especially as people were lining up around the block. I'll never forget that day. Them launching the news helicopter and just literally seeing lines of people off to get their stuff before the dispensaries close. But I digress. I want to get right into the conversation here with you, Bart. And starting with part one in customer loyalty, there are so many different companies that people can choose from, especially when it comes to medical marijuana. This could play a significant role in difficult times like a recession. So you've been writing about the cannabis industry for a long time. In your experience, interviewing all the experts that you've talked to, how important is customer loyalty when it comes to facing something such as economic hardship?
Yeah, it's interesting. I mean, one of the things that we saw, especially at the beginning of the pandemic when tourism kind of shut down was, I was talking to retailers and growers and asking them how they were doing. And, a lot of them were saying, well, yeah, we might not get the tourists coming in that we normally would have because people can't travel, but we still get all the local customers. We still get all the people that are, in the neighborhood. And I think that's really true. I think throughout the industry that you shop at the dispensary that's closest to you typically. So yeah, so those customer loyalty programs, point systems, incentives for people to come and shop and to come back and get discounts, after they've been a loyal customer. I think that's worked really well for dispensaries, and probably something that they're doubling down on now as things are getting a little bit tougher.
So you just mentioned, building that customer loyalty through some of those programs. What are some of the product buying patterns that you noticed during the last downturn in 2020? And were those patterns the same for medical marijuana as recreational? And do you think that those patterns may repeat themselves if we face another downturn, or do you expect something different?
Yeah, that's a good question. I think that there probably are a little bit different factors at play now. I think when people were locked down at home, I think a lot of people were shopping for, especially like, if you're at home with a family and you still want to consume cannabis, but you're not able to go out with your friends, like a lot of people were probably consuming more kind of discrete, um, you know, form factors of cannabis, probably edibles, maybe vape pens, those kind of things were probably, more popular for people that weren't going to be out and about. Now that it's a little different situation where you could still be going to parties, you might be doing backyard barbecues, you might be out with your friends. I think people are probably shopping for value products, and flour is always a good value. Flour, pre-rolls, those kind of products that you can buy a lot of. And if you're out in a backyard, it doesn't really matter if people around you can smell uh, what you're smoking, that kind of thing. So, I think that's kind of the difference is, we're not locked in our homes as much now as we were in the past. And if people are really concerned about their purchasing patterns, the amount of money they have in their wallet, I think that flour is still always that kind of very value driven product. And I think people, yeah, and I mean, if you look at what's going on in the mature marijuana markets like Oregon, Washington, Colorado, even places like Michigan, which has matured really quickly, flour is really cheap. And, people are buying $80, $90 ounces of flour. So, and in Colorado, I mean, medical marijuana is even cheaper, medical flower. So yeah, I think a lot, that's what a lot of people are going to be buying right now if they're cost conscious, if they're worried about the amount of cash that they have to spend on cannabis.
I think that brings up a really good point, Bart, because the industry as a whole operates on some pretty thin margins. We've seen the price of the crop come down quite a bit in the past couple of years. So, do you think that these companies are going to overmarket themselves in a potential recession scenario, or is this the key to success? Is this the change that they need to be implementing now to potentially develop or at least enhance those loyal customer relations that they already have?
I mean, where I'm at here in Colorado, like, it is so competitive that,
Hmm.
that customer loyalty is really important. And I think that, offering those incentives, offering ways to get people to come in, like, I had a buddy that was visiting here a couple weeks ago and, got a pre-roll for a penny because it was his birthday. Those kind of like nice little, bonuses that people are giving out for, any kind of incentive to get people into your store versus the one down the street, I think is just, it's a smart play. Um, but yeah, I mean, again, like going back to the medical marijuana, so, I mean, like, the local alt weekly here is advertising, for a lot of dispensaries. And I saw an ad the other day, and it was like a quarter pound of flour selling for $250 if you have a medical card. So, I mean, we were talking about really, really low prices right now. And it's great for the consumer. It's tough for the business. These businesses really need to be thinking about their cost of production and making sure that they're as efficient as they possibly can if they want to survive. When the market is as tough as it is right now.
And that was something that you brought up in that sort of cost of doing business that you brought up in your article. At MNC, just a little bit of quick background, we're all former journalists, and that experience helps us, helps our clients learn how to take advantage of every media opportunity. So I want to jump into the kind of insider media relations part of this. And we know that the economy, whether it's up, whether it's down, whether it's up and down, which it seems to be lately, is always a story. So what kinds of angles do industry reporters like you look for? How can medical marijuana companies help you sort of tell these stories and personalize these angles?
Yeah, that's a great question. A lot of pitches that we get are, we have this great product and we'd like you to write about it. And that's not really what we do. We don't do product reviews. We don't do promotion. We don't want to seem promotional. We're all, just adhering to all of the same journalism ethics that you would any mainstream publication or any other journalism outlet. So, what's usually really effective for us is if the company can kind of tie their pitch to a trend that's happening. So I don't know, I'm just making this up, but if someone says, okay, so we're 2 years out of the pandemic, people are back out and about, it's summertime, maybe they're at a backyard barbecue, and we've also just released this pre-roll product where people can, go out and maybe they're sharing joints again. That kind of pitch works a little bit better for us because we're like, oh yeah, so maybe let's look at the data and see if, pre-roll sales have gone up. And if they have gone up or down or whatever they are, whatever's happening with the data with these pre-rolls, then let's talk to your company about how you're trying to kind of capitalize on people being able to be out and about a little bit more as the pandemic restrictions lift.
And I want to really highlight what you just said, that there's a data hook to this, that it's not just about a product. The product is peripheral to the data and the information that may indicate a trend.
Sure, exactly. And that's what we want to write about. We want to write about trends. We want to write, pieces that are anchored around, hard data. Hard data is hard to come by in the cannabis industry. There's not a lot of that out there, but there are some good data sources out there. So if we can use that to highlight a trend, and then we'll, a lot of times feature certain companies and just, talk to them anecdotally about what their experience has been and how they, are maybe trying to capitalize on consumer behavior or just how they're doing it, right? Like what their operational adjustments have been based on consumer behavior or something like that.
Well, Bart, yesterday, I'm sure you saw it, Bank of America came out and said, yep, we are forecasting a mild recession for the US. And, that's not apocalyptic, but it's still a concern, especially when you have so many companies operating on smaller margins. So you are going to see companies probably go under. And that's just kind of a sad part of it, but that's what happens. But the point I want to make here is so many companies feel like they can't say anything when things aren't looking good. They just want to ride that kind of like high wave when things are really looking up for them. But when the wave comes crashing down, so to speak, they don't want to say anything. So, in your opinion, why is it so important for those people to still reach out to you, to still try and tell their stories, even though, their competitors in mature markets, as you pointed out, Colorado being as competitive it is, may look at that as a weakness?
Yeah, I mean, when this industry is so new and people are all just kind of making it up as they go, right? They're all, trying to figure out how to, succeed in a really new, fast changing market, with market conditions changing all the time, and the economic conditions changing all the time. I mean, I think it's just kind of, up to the business owners and their kind of generosity of spirit, or whatever it is, to share if they've learned anything and made some mistakes, maybe. But we do. I mean, that's a lot of what we do with our reporting, and especially with like the content that we have at our conferences, where we try to get people to come up and say, here are the lessons that we've learned when we've made mistakes, and that this is how we've come up with solutions to get past some of those things. And the whole industry benefits when people speak that way. Everyone, it kind of, rising tides lift all boats, whatever. But yeah, I do think that people talking about their challenges is beneficial to everyone, because maybe you've got somebody over here that's experiencing the same exact thing, and they hear from you how you figured out how to get past that obstacle. Then they're able to do it as well. So I mean, it's a super competitive industry, and I know that people don't want to give out proprietary information, and like I said, I think everyone's kind of figuring it out on their own. But yeah, I think if there is some kind of camaraderie here among these businesses, they really do benefit each other by talking about the tough times, not just the good times.
You mentioned a minute ago one of your least favorite pitch approaches is, "Hey, I have this great product, please cover it." And then you mentioned, that sort of data-driven angle of what would grab your attention. Do you have some other examples on ways that companies can successfully, usefully reach out to you and catch your attention? I mean, what kind of approach would you say, "Hey, this is a good way to pitch me"?
Well, so a lot of our pitches come through PR agencies, right? They're usually someone that's in a ancillary business who represents a plant touching company that emails us, right? And the most effective pitches are when that PR person is in contact or conversation with that business owner, and that business owner says, "This is what we're experiencing as an operator. Here's a trend, and then this is how we're trying to maybe solve that trend," and that, or whatever that issue is. So again, like, yeah, just saying like, write about our company because it's cool, like that doesn't work.
Mm-hmm.
Have something that's going on in the industry. Have if, for example, like in Colorado, all of a sudden the regulations change for edibles, like maybe the packaging that everyone's been using is no longer compliant. Maybe the child proofing that they're using isn't working anymore, whatever it is. And then it's costing these businesses a lot of money to have to reformulate that packaging. Pitch us on that, on what's going on. And then if you want to say, here's how our company figured out how to do it, and comply with the new regulations, that's something that we'll write about, because it's got a news hook, right? It's there's a change in the law. And then also, we, because we're a B2B publication, we're always writing about tips and strategies for business owners. So yeah, so that's kind of how it works for us. Like that, those are really effective pitches.
So you mentioned email, Bart. Do you get a lot of emails? Do you get inquiries on Twitter? Like, if somebody is wanting to get a hold of you, where would they do so?
Yeah, I'm on all the social media platforms. Just search my name. No one else has my name, so it's pretty easy to find me. But yeah, email is great. Email is probably the best, just because it makes the most sense when we're filtering it through the whole editorial team and making sure that everyone's on board with these pitches. But yeah, my email is just my first and my last name with a dot in the middle at MJBizDaily.com.
It's pretty good info there. Well, we've had a great conversation so far, and we're kind of moving into the third phase of this. And I think this is where we're going to kind of get into the meat and potatoes of your article here, especially as we talk more about brand resiliency. It's a third part of brand protection PR, because we know business owners are always on the lookout for ways they can strengthen their business, weather threats, and of course, the economy is a pretty big threat right now. And also look at ways to bolster their reputation and bottom line. And that's one of the things that we pride ourselves in helping our clients do, and prepare themselves for the unexpected. So that's why your article, Bart, was really nice and kind of stuck out to us as a means to say what's happening now and how can people prepare. And one of the best ways I think you did this is you kind of drew a line and said, okay, we've never done this before. The closest we came was 2020. But things may be different with this economic downturn. So can you talk a little bit more about that?
Yeah, I mean, the 2020 situation was actually really, I mean, it was horrible for everyone that was experiencing the pandemic, but for cannabis businesses, it was actually kind of a perfect scenario where we were getting stimulus checks from the government. We didn't have anywhere to go. You couldn't travel. You couldn't even go to restaurants, really. So everyone was stuck at home, but cannabis businesses were deemed essential, as you mentioned at the beginning of the show. And so that's what people were spending their money on. This is way different now. I mean, there's no more stimulus money. People still are traveling. I mean, people are probably traveling way more than they were, at the end of 2019, just because they were stuck at home for so long. And you can go back out and do pretty much everything that you were doing prior to the pandemic. So that's what makes it really difficult for cannabis companies right now. And also, if they, were a new company in 2020 and they were building their revenue projections and their business model around how people were behaving in 2020, I mean, this is way different, right? So, it's for the winners and losers in all of this. I mean, the winners in the cannabis industry are going to be those people that have protected their brand, have focused on quality, who have built very recognizable companies that if you go into a store and you only have a few dollars to spend, you're going to spend it on that brand that you know and trust, that is a quality brand, right?
Boy, I love how you really broke down the difference there between the last recession, hopefully what will be a fairly mild one coming up. But one of the things that you really dug into in your article was this disparity, this sort of geographic disparity. So you mentioned that the marijuana industry in states like Colorado, Washington, Oregon, and then I think, did you just mention Michigan? Was it Michigan?
Yeah, Michigan.
Yeah. Might have a more difficult time, which seems a little counterintuitive. Talk about what your thought process is there.
Well, that's from the business owner standpoint. I mean, there's just so much competition in those four states in particular. I mean, Oklahoma on the medical marijuana side, the same way. I mean, these states that have just allowed a lot of, just more like kind of a free market. They don't have limited licensing. They're basically letting anyone in. Oregon's a great example of that. I mean, it's really easy to start a cannabis company in Oregon. The cost of permitting and all of the regulatory hoops you have to jump through is that's all pretty simple compared to a lot of other states. But and then you compare that to medical marijuana markets where, like, I don't know, Ohio, somewhere like that, or Pennsylvania, for example, where it's a lot more controlled by the state. They're only giving out a certain amount of licenses for retailers and cultivators. That kind of artificial control of the market means that prices usually do stay pretty high. Wholesale prices for cannabis in markets like that usually are 2 or 3 times higher than they are in a place like Colorado. So the operators are able to operate, with a lot kind of more generous margins, and it's easier to turn a profit in states like that.
Actually makes a ton of sense. I grew up in Vermont, and there they have the state runs their entire liquor store thing. So, the price in one spot is going to be the price in the other spot, as opposed to Colorado, where it's kind of like no holds bar on the alcohol side. And same thing with marijuana. It's a really interesting point there. Last question for you, and we will get you off the hot seat and back to writing some incredible articles for MJBizDaily. What should business owners and executives be doing now to protect their brands before we plunge into recession? Is it too late to do anything now? Are we too far gone? What's kind of been your experience in talking to people and writing this article?
No, I do think that the companies that are going to survive, if there is a prolonged downturn, hopefully it's not a prolonged downturn, but those are the companies that are really lean, that are efficient, that focus on their cost of production, and try to just get all of their costs down and really run as tight a ship as possible. I mean, it's really easy to say, but like that's it. I mean, look at data, look at ways to maximize efficiencies. I mean, it's really focusing on where that market is going to go. I mean, if you're in a state like Michigan, right? Like, for example, I mean, it's a relatively new rec market, but a couple of years ago, I mean, the prices for a wholesale pound of marijuana flower were, $6,000-$7,000. Now it's closer to $3,000. But if you built your business around getting $6,000 or $7,000 a pound, you're in a lot of trouble. But if you were smart enough to look at what happened in states like Colorado and Oregon and Washington as they matured, you saw where that price was going to end up, and that's how you built your business. You built your business on, much more conservative projections, and I mean that's really how everyone has to think about it. And we have states like New Jersey and New Mexico that are coming online with their rec programs. I'm really hoping that those business owners are not getting too excited about the prices they're getting when the market opens, because it doesn't stay that way for long.
We'll send them this podcast episode.
And
I'm
your
sure
article.
they know that, though. I mean, it's obvious if you're paying attention to what's been going on. Yeah.
Well, I think that's the question. And I really, really hope that people are reading reporting like yours to help understand what they're getting into when they get into, a marijuana or medical marijuana business.
Yeah. I don't know. I hope so. I hope you're right.
Well, Bart Schaneman, thank you so much for joining us today. We really appreciate all of your time, all of your expertise. And if you haven't read Bart's articles or Marijuana Biz Daily, you absolutely need to pick it up and make sure that you're reading it, every time it comes out, because it's just chock full of fantastic information that gives everybody a great perspective on how this industry is changing and maturing. So thank you so much for joining us today.
Thanks for having me. I really appreciate it. It's been fun. Thanks.
Well, gosh, Jordan, we really picked his brain. I hope I hope he has like a few minutes to relax this afternoon.
Yeah, seriously. And he said he's got to go back to work after this. It takes a lot of brain power to be on the podcast. So hopefully we didn't take too much from him. And if he needs a letter to send to his boss, we'll happily sign that off and say, yep, Bart gave a great interview and don't dock his pay for this.
Afternoon off.
Nice. But really quick, I want to recap one of the big points he pointed out to us, in at least when talking about building customer loyalty, is when you are going into a tough economic time, you want to have a brand out there that people can recognize, that people understand, that people trust, so that if they only have a few bucks in their pocket, they're going to come to you. So if you haven't done so yet, you may want to put a little bit more time and effort into that, so that should that be the case, you're not alienating yourself, especially in competitive markets like Colorado, Oregon, and Washington.
Yeah, for sure. Well, I'm going to sound like a broken record, because the thing that caught my attention was another journalist who covers, the cannabis industry, talking about, please, please, please do not pitch me on your fabulous new product. I am not covering fabulous new products. And I think Bart gave such a fantastic set of examples on what will grab his attention, which is what we know is good foundational PR. What are the trends? What are the
Right.
business hooks? Where's the data? Can you back this up? How does this tell a larger story about the industry, not about your particular product or your particular business? So that's just good insider media relations.
And just to piggyback off that one bit, the part that kind of really stuck out to me when he was talking about that, and we've had a number of journalists come on the Move the Stairs podcast. He brought up a point that nobody else has, and that's that journalists who write for industry publications are still abiding by and operating by that same kind of rule of ethics and writing a story that you would see on your nightly newscast. And I just thought that was really cool for him to bring up. All right. Last take-home point about building a resilient CBD brand. I thought it was great that he kind of broke down and said, listen, a savvy business owner, and many of them are going to look at states like Colorado, Washington, and Oregon, Michigan that have matured on the recreational side, Oklahoma that's matured on the medical side, and say, okay, what can we do now, especially if they're getting ready to open the doors on the doorstep of an economic
you
recession.
See where this is headed.
Yeah, absolutely. So it kind of gives you a little bit of a crystal ball or a reverse crystal ball to look back in time to see what happened.
Yeah. Well, that's a good point. So I want to say thank you again to our special guest, Bart Schaneman from MJBizDaily, for joining us on the Move the Stairs podcast. And thank you for listening and watching and joining us today. We hope you will join us again soon for the next all new episode of the Move the Stairs podcast. Thanks, Jordan.